Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Reema. Guys, hi. Good morning.
Hi, good morning. Looks like today will be a little better day. Record highs for S&P, a soft comment.
But you, the green, Reema, I mean, I think it's
a vibrant.
The market's going to take a cue.
Yeah. Vibrant colors this morning.
Well, indeed. And yesterday we were glaring at red. And I think today should actually be a better day. We can't really run away because we don't know what Trump's going to do next. But I think today we should be a little bit more optimistic about the day. And then just tomorrow and then the long weekend.
The eyes are gleaming. And
end of earnings as well, guys.
Absolutely. Well, I think the start is also good in terms of inflation numbers, right? And I think that's essentially what I want to start with before we go any further. And this is not, by the way, inflation just in the US. Yesterday evening, we had India inflation numbers as well, which is not a big surprise or anything. I mean, actually, it's in line with what markets were expecting. The numbers should come up on your screen. India, 1.6% growth. US inflation, 2.7%. So those are the figures up on your screen. I mean, I think you can add... maybe if you wanted to comment, India inflation 1.6%, comfortable, not a problem. US 2.7% has not risen yet. I mean, the expectation is that eventually US inflation, because of tariffs, etc., maybe a month, 2 months down the line, is going to rise. But for now, I mean, this is a good-looking screen. So US equities, on the back of the number in the US, it reached all-time high. The changes on your screen, the S&P, the NASDAQ, but it was actually the small-cap space which really rallied hard, 3% or so in the green. So the CPI number out of the US was taken as a sort of a clearing event for a 25 basis point cut in the month of September. Actually, your Treasury Secretary, Scott Bessent, who went on to Fox, the news network, and said, the Fed ought to be open to a 50 basis point cut in September. So, of course, I mean, this is just, coming in from the Trump administration in terms of a push. But 25 is something that the markets now are comfortable pricing in because of the inflation number. Dollar fell sharply, and we're about 0.5% lower to 98. Of course, it was to do with the cooling off inflation. Actually, the no rise in inflation, I should put it that way. But there was also one more factor. And that factor, of course, was the new Bureau of Labor Statistics chief. Remember, Trump asked the previous BLS chief to leave. He basically fired him, and his new pick has essentially apparently said that he wants to suspend the monthly NFP report, the non-farm payrolls report. He says there are too many problems in it. What we'll do is we'll sort of look at this. We'll release this data on a quarterly basis till we fix the monthly report. I mean, is it actually going to happen? But at least this is what reports are suggesting. This is another headwind as far as the dollar is concerned. And it was, I think, a mix of both that you saw a pretty steep fall as far as the broader dollar is concerned, which is the dollar index. Oil prices, $66 a barrel, not very much. To talk about, a few specific news items, Intel was up 6%. 3 days in a row it's been gaining. Remember, it's another situation where President Trump publicly asked the Intel CEO to leave. Of course, I mean, the CEO went and met President Trump in the White House. Stock's done well since. In terms of just talking about chip-related news flow, China is urging NVIDIA, the Chinese firms, from not using NVIDIA H20 chips. The background, of course, is President Trump saying that NVIDIA and AMD, etc., are going to, pay U.S. government 15% of what they make in China to the U.S. government to be able to sell to China. And this is essentially what is coming in from China. And of course, the point with regards to China has been that they think that there are perhaps some backdoor to these chips where US, etc., can access data in China. So, that continues. With regards to China, some bit of positive news flow yesterday. China and India are set to resume direct flights to each other after a gap of almost 5 years or so. And apparently this is going to happen in the next 1 month. A fair bit of easing, remember. We've seen between attempts at normalization. Press note 3, for example, is something which is being diluted, which is being walked back, etc., etc. So we'll see perhaps more, but this is, of course, a big step. I mean, so far, flyers were going through Singapore, Hong Kong, etc. Now you got, after 5 years, direct flights, perhaps, which once again will start. Another bit of news flow, a cargo of Indian diesel refined products is heading to China, again, the first since 2021. So a lot of change which seems to be afoot with regards to India and China. And of course, in the backdrop, of course, is the worsening of relations between India and the US. Just to tie in the markets and what they perhaps will do today, yesterday was disappointing. Monday was a big, decent day. Yesterday, the market gave up about 50% of the gains. And the question really is, if both the Nifty and the Nifty Bank break the recent lows, are we going to sort of slide without a bounce? I mean, I thought there perhaps is a pullback which is due, and it looked like Monday gave us that indication that that pullback is coming. But yesterday the market sold off. This morning, I think the start, of course, is set to be higher. We'll have to pick up indices from there. Just the levels, the Nifty near-term levels. Of course, we broke the previous levels of 24,634 on the upside, but could not sustain above it. The high which the market made was 24,702, and that remains the first level which the market needs to take out. The low of 24,337 is the number on the downside. For the Nifty Bank, it also gave up most of its gains. It's back to the prior lows of 54,905, and here 55,582 and 55,652 are the upper end, the resistance level, the resistance zone really. And on the way down, if the recent low of 54,905 goes, then you're looking at about 55,440 to 54,054. So these are two levels. We're already at the first support level. We just need to see if that breaks. If it breaks, then the second support level comes into view. But I think the GIFT Nifty is indicating a higher start. Hopefully, we kind of build on that 70-point up move that the GIFT Nifty is implying. Rima.
Indeed, a softer CPI inflation print back home and record highs on Wall Street. Both these two factors helping the GIFT Nifty up by about 75 to 80 points. But as Prashant said, there are lots of big global stories to take note of. Investors doubling down on a September Fed rate cut. Besant batting for a 50 basis points rate cut. And then there is this battle for AI supremacy. Perplexity AI has made an unsolicited $34.5 billion bid for Google's Chrome browser. This was confirmed by CNBC. And what's absolutely stunning is the valuation, because in July, a month back, Perplexity AI's own valuation was $18 billion. And now they're making a bid for Chrome at double that. And yet they say investors seem to be backing this deal. So it's all happening in the world of AI, and that's the other one we need to track. Let's just take a quick note on what's happening in Asia. As we pointed out, GIFT Nifty is higher. Japan is soaring. That's up another 1.5%. It's a fresh high, and it's crossed that 43,000 mark for the first time ever. We also got the quarterly or the latest Tankan survey, which shows that manufacturers in Japan are turning more optimistic after Japan struck that deal with Washington. Also, with respect to China, U.S. Treasury Secretary Besant has signaled that he might meet his Chinese counterparts within the next 2 to 3 months. Back home, just some more numbers on that inflation print. 1.55% for the India CPI inflation print. It's cooled down in the month of July. This is the 9th straight month of moderation and the lowest since July of 2017. So it's beaten consensus. In terms of flows, the DIIs were net buyers to the tune of 3,500 crore rupees, while the FIs sold a similar amount. 3,400 crores sold in the cash market. Earnings season remains in focus. Today, Nika, Honasa, both of them have delivered good set of numbers. And we will track numbers from Jubilant Foodworks, IRCTC, BPCL, United Spirits, amongst some of the others. Nigel?
Well, today, by the end of the day, if we don't end with some good gains, I think I'll be a little bit disappointed, because just looking at the screen, looking at the global cues, some optimism that maybe, in fact, the peak Trump tariffs have played out. And also, if you look at yesterday's trading session, well, we ended at the day's low. So by the end of today, you'll be optimistic that maybe, in fact, you go home with some gains. And just take a look at that. Yesterday, you had the sensex that ended at the low point of the day. It's a Tuesday. You have weekly expiry that played out there. So that could be one factor at play. But otherwise, the problem pocket for the market has been the Nifty Bank, because the shorts are getting added out there. And in yesterday's trade, though the Nifty ended down with a cutoff closure around 100 points, the India VIX remains at very, very subdued levels. So the the India VIX at least is not indicating that we're going to pull back big time from here. Though the Nifty was down close to 100 points. But as I mentioned, the shots are getting added onto the Nifty Bank. The open risk moved up yesterday. That one, in fact, lost its way in trade. And the FIs, they have been adding shots, and yesterday was no different. They added close to 5,000 contracts, short positioning at around 92%. Yes, those are at extreme levels that we're seeing by the clients. They continue to remain net long in terms of their positioning. On the option side as well, yesterday the FIs, they in fact wrote calls while they unwound some puts as well, in terms of the options data. And if you tie that in with the options data for the market on the whole, well, it perfectly ties in, because yesterday the call writers, they felt that they're back in the game. And that's what caused the PCR to come down from around 1 to around 0.78 or thereabouts. And at around 0.65 to 0.7, that's when you see a bit of a bounce. So we're moving gradually towards that zone. I'll keep an eye out on that zone, 0.65 to around 0.7, because the call writing was extremely aggressive. Remember, these options expire tomorrow. That's a 24,700 call, 60 lakh shares getting added there. 24,500 call as well was very, very aggressively written in trade yesterday. And the premium had come down from around 120 rupees or thereabouts. So let's bring the levels up for you on the screen. The Nifty, well, yesterday's high, which was at around this 24,700 odd, that's the resistance zone that we're looking at. Once you get past this, then you look at higher levels like the 20-day MA. But for the time being, this appears to be a very stiff resistance, because in the first hour of trade, we already went to that mark. The reference point on the downside, though, is 24,350. That's the recent low that we made in that vicinity itself. But one positive yesterday was at least the Nifty made a higher high. After many, many days of making, lower highs, we broke that trend, and now, in fact, yesterday as well. So today, this is the mark that you're looking at in case the Nifty can get up and going. Crucial resistance mark. The Nifty Bank, that's lost its form totally. It needs to find its footing. Otherwise, the Nifty will be in trouble. And yesterday, in fact, it ended at around that 100 DMA. So you'll want it to protect it today on a closing basis. So I'll keep an eye out on that one. But as I said earlier, today you should be a little bit more optimistic. And by the end of the day, hopefully we go home with some gains. If you're looking at the stocks, Titagarh Rail, yesterday I had mentioned numerous times during the course of the day, that could probably get into the FNO ban. That's precisely what's happened. So that's a stock you should keep on your radar.
Thank you very much for that. Let's get to the equity calls then. It's Mahesh Nandarkar of Jefferies who believes the Indian market is poised for a short-term bounce. This is after a sharp underperformance to the MSCI emerging markets over the last 12 months. What will drive it? Relative valuations getting back to average, domestic flows jumping considerably, and a stronger year-on-year number in the September quarter earnings fine print on account of the low base. And then there is the potential trade dispute resolution with the US, which could act as a trigger. The bounce he adds may not sustain for a long time. It could be short-lived due to the weak value versus growth equation and equity supply concerns. He says the laggards in the last 3 months that they like are Lodha, Cholamandalam, Adani Energy, Shriram Finance, Jubilant Food, Mankind, NTPC and Crompton to play the near-term bounce and beyond. And they also like cement, given the pricing-led recovery, and it remains their high-conviction idea.
Okay, well, views coming in. Let's get one more. Prashant Perola is Portfolio Manager, Emerging Markets at Allspring Global Investments. Prashant, good morning. Great to have you with us here. Actually, late evening to you, right? Just Prashant, quick word on the sentiment here in India. I don't know if you have a firm view on whether the 50% tariff, the 25%, which takes it to 50, gets resolved in this 20-day period. Do you believe it will happen? Some see hardening of positions, others see, well, eventually it will get done. When I say eventually, in this 20-day period. And of course, sentiment during the course till it happens remains weak. How are you looking at things, Prashant?
Yeah, I think the Indian market's been weak, especially because of the 50% tariff number. That seems a little too high given where all the other countries are placed today. I think if you look forward, we have President Trump meeting President Putin on August 15th. And we still have some time before this 20-day period kind of comes in. So I remain optimistic that something will move. It might actually happen on August 15th during Russia and US negotiations. But it seems like a pretty high price to pay today.
Prashant, what about the US markets? Do you think a 50 basis points rate cut is coming in September?
Yes, I think some rate cut is definitely come into the picture, especially after today's announcement of the CPI numbers. They were not as high as expected. So if we look forward, the Fed has a dual mandate on employment and inflation. And if inflation kind of continues to hover around these numbers that it is today, and employment numbers, you were talking about the revision that happened was pretty bad in the last revision cycle. So I think the Fed will weigh towards employment, and we would expect either a 25 or a 50 basis points rate cut.
Hi, Prashant. Good to see you again. What about the Indian markets, though? You know, such a stark underperformance. Do you think we have good reason to believe that maybe, in fact, we're closer to the lower end of the range? At one point of time, we were leading the way. We've entirely given up that underperformance. Do you think it's time for us to catch up a little bit, going by the global market buoyancy?
Yes, I think definitely there's room for Indian market to move up. People will eagerly await what happens over the next few days with Russia, Ukraine, and also I think there's still time for the Indian government to talk to US and figure out a deal from the secondary tariff picture. So if we move back from 50% to 25, which was the base case there, that will give some sort of relief rally to a lot of these names.
You know, another factor, Prashant, that I know you look at some of this stuff closely, I put this out yesterday, just something to think about, right? Which is the lack of AI plays in India, and especially at a time like this, because you know, market goes through fads and fancies, and the number one fad and fancy, which it has been for the last 6 months, AI, and you don't have very many core AI plays here. Is that a bit of a factor? Does that come up in conversations at all?
Yes, India is kind of missing out on the AI factor, especially, and I know Perplexity did a deal with Bharti to get their Chrome kind of competitor on Bharti network. So maybe with time, there'll be some sort of plays emerging. But today, when you look at the AI landscape, it's basically the US markets and a little bit of Taiwan and Korea that people can play with. So it's limited choices today with regards to AI in India, which, I mean, if AI factor is going to peak out, might even help the Indian markets on that side. But today, I think India is definitely missing on the AI picture.
Prashant, we'll leave it there. Good speaking with you as always. Thank you very much for joining us here on CNBC-TV18. Appreciate it. Well, I think what we're going to do is look at the big number, right, which is the macro number. We talked about the number in the US. Let's talk about the number in India. Retail inflation in July eased to 1.55%, the lowest reading in 8 years. But this was slightly above the CNBC-TV18 poll, which predicted a reading of 1.3%. Lata is here with more on the fine print. Lata.
Yes, it was records galore actually on the downside. You could also put the 8-year low as a 98-month low. 1.55 compared to 2.1 in the previous month, and year ago 3.6. All really very meek numbers, very low numbers. And if you looked at the key actor, it is food, and food CPI has come in at a 78-month low. In fact, the two weighty items, cereals and pulses, they're falling even month on month. A little unusual because by July, traffic dislocation normally pushes up prices. But now, because the monsoon is early and bountiful, the trader sentiment is a little bearish on these items. Even others like milk, meat and eggs are all falling year-on-year terms. We also see vegetables falling year-on-year terms, but month-on-month vegetable is still expensive. That's just by way of detail. The core inflation number also has come in lower. That's very big because that was the one that was at 4.4 in June, which means above the mandatory level. But now that's fallen to 4.1. By some calculations, it's even fallen to 4. People interpret this number differently. But it's all ends up lower. If you took away gold from core, then it falls to actually 3%. So a very, very benign inflation number. What happened to bond yields? They didn't do anything. They actually went up. We are still sitting at 6.47 on the 10-year, which is a good 30 basis above what it was in May after all those rate cuts, giant rate cuts that the Reserve Bank has given. Clearly because the market is looking ahead. Even if you looked at the very benign US inflation numbers, 2.7 instead of expectations of 2.8, the bond market is not reacting much for other reasons. One, it doesn't see too much of rate cuts ahead. One more, usually the bond markets don't react when you're at the end of the rate cutting cycle. But more importantly, now there is a fiscal worry. The worry is that if tax revenues are going to fall, if nominal inflation, nominal GDP itself is going to be very low because of 1% or negative WPI, wholesale price index, then fiscal deficit as a percentage of nominal GDP starts to look higher. Also, tax revenues may surprise us. There may be a surprise package for exporters who are struggling. All that is making the bond market very bearish. Will they have to look for more supplies of bonds from the market? Very little appetite. FPIs are selling bonds. So for all the good news in inflation, don't expect good news in the bond market.
Thank you very much for that. Moving on then, let's also tell our viewers what we've lined up on the show today. So first up, coming up at 8:35, the management of Balrampur Chini Mills will be joining in to discuss their Q1 earnings. 9 a.m., the management of Suzlon Group. As their CFO, Himanshu Modi, steps down. We will also talk about their Q1 earnings. 9:20, Manish Gunwani of Bandhan AMC will be a market master of the day. 9:30, the management of BEML will join in to talk about their Q1 earnings. Following that, Sunita Reddy of Apollo Hospitals will be chatting with us at 9:40. A little later, 9:50, the management of Granules India will talk about their Q1 performance. And towards the end of the show, in our special segment, it's the economy. Lata will be in conversation with Ashish Gupta of Axis AMC on stocks, banks and bonds.
Well, time to slip into a short break. Got a lot of stock-specific action to track for you. We'll get to that in just a bit in our special Top 10 segment. But we're looking at Apollo Hospitals, OMGC, JSPL, Suzlon, NHPC. You have Nika as well as Kochi Shipyard and PTM. So 8 stocks will be reacting to positive news flow. But PI Industries, those numbers look weak. And NSDL will be reacting to negative news flow. Take that break, come back. We get into further detail on all of these names.
Welcome back. Indian markets are likely to open with a positive bias, mirroring the positive sentiment on Wall Street. And Asia, too, is tracking higher. But let's talk about stocks. Our research team is standing by. This is CNBC-TV18's list of top stocks for the day. First up, Apollo Hospitals. Vinny joins in to tell us how the numbers looked.
Hi, good morning. So Apollo Hospitals, a good set of numbers that's coming from the company. Revenue, 15% growth there. EBITDA is up around 26%. Profits up almost 40%. Improvement in terms of EBITDA margins by around 130 basis points on a year-on-year basis. So strong performance, mainly led by good growth that the company saw across all the 3 segments. Better than estimates, better than CNBC-TV18 poll, as well as better than what the street was anticipating as well. Now, talking about the healthcare service part of the business, that's the hospital business of the company. That saw good growth of 11.2%. The IP volumes over there were up by 4% year-on-year basis. Margins, that saw a bit of a expansion that came in, and this is, do not forget, despite the Bangladesh patients not being there, which is impacted during this quarter. Despite that not being there, they've witnessed an expansion in terms of margins. Occupancy is a bit lower than what we saw last year. 65% is what the hospital occupancy came in at. Healthcare business revenues grew by 19%, so strong growth there. They turned PAT positive this time. 57 crores was the PAT versus a loss last year of 12.9 crores. And Apollo 24/7, the GMV, that was also up by 23%. Lastly, we had AHLL that was also seeing a good growth this time. That was up by around 19% and expansion in terms of margins. So good growth, strong growth across its segments, and that is why we're expecting green on the screen for the stock.
Green on the screen, Vinny says, for Apollo Health and Hospitals. We'll keep an eye out on that one. In fact, we'll be joined by the management at around 9:40 a.m. Ms. Reddy will be joining to detail the past quarter's numbers and the way ahead. Let's hop across to Sonal, though. She's here to tell us about OMGC, and I think she's got some good news for us as well. Sonal.
Good morning, Nigel. Yes, expecting green for OMGC as well this time around. The numbers, though lower on a quarter-on-quarter basis, they were much better than what the street was working with. Revenue is down 9%, but better than estimates. EBITDA was down 2% to come in at 18,657 crore rupees, which compares with a poll of 17,000 crore rupees. Profits also higher at 8,024 crore rupees. It's an increase on a quarter-on-quarter basis as well. Crude production was in line with expectations, flat on a quarter-on-quarter and on a YOY basis. Average daily production, however, declined 1% on a sequential basis. This is a decline that we are seeing after a rise for the last 2 quarters. Gross crude realizations at $66 per barrel were largely in line with estimates. So expecting a green tick on the stock. Management commentary is something we'll get at 3:30 p.m. on the conference call today.
Okay, all right. Thanks a lot for that, Sonal. Well, I'm going with green on JSPL as well, and those numbers actually look better than estimates. Look at it on the top line, well, that was more or less in line, but the EBITDA performance, that was heartening at around 3,000 crores approximately, which led margins to come in at around 24%, and net profit number as well, that did come in better because of lower finance cost. What played out? Remember, for the past quarter, you had destocking that took place, in fact, and that's why because of, in quarter 4, there was a lot of inventory that was pushed out. That's why quarter 1, you had volume degrowth. But in spite of having volume degrowth, still these numbers look very, very good. And the India EBITDA per ton scaled to around, scaled big time to around 15,000 rupees, which is a sharp improvement. Most of that came in because realizations did improve by close to around 6 to around 7%. Besides realizations improving, well, their sales mix as well looked quite good. So the value-added sales, the exports proportion as well did improve both on a year-on-year as well as on a sequential basis. And the net debt, yes, it moved up, but that's because of nearly around 2,200 crores of capex. So these numbers on the whole look good. Higher realizations, no benefit of operating leverage, but a better product mix and lower than expected cost played out in that favor. The stock, though, yesterday saw a big delivery-based buying, expected to open up in the green. Vivek joins us, though, to tell us about Suzlon as well as NHPC. Morning, Vivek.
Well, good morning. Two results to track quite closely. First one, Suzlon, remember this particular quarter, at the end of Q4, in fact, the company had said that across all parameters that they would grow 60%. So largely in line with that, especially when you're looking at the financial parameters, most of the growth is in line. PAT was impacted by one-off. Key things to watch out for, especially for Suzlon, given the fact that there has been a significant resignation as far as the CFO Himanshu Modi is concerned. And along with that, remember, the company also had a large block deal where promoter offloaded shares, something that we will get more clarity on. Now, talking about the numbers, revenues higher by 55%, EBITDA higher by over 62%, margins quite strong at 19.1 versus 18.2%, profitability higher by 7.3%, but there was a one-off tax expense this time of close to 135 crores that impacted the bottom line. Order book quite strong at 5.7 gigawatt, and Q1 deliveries too was quite steady at 444 megawatt. Trajectory as far as deliveries is concerned is another key monitorable. Now coming to NHPC, again a steady quarter from the company this time around. Key commissioning of the Parbati 2 was something that aided the performance. So revenues higher by 19%, EBITDA higher by 12%, margins quite steady at 56.1%, and profitability higher by 4.2%. In terms of the conference call, the company said that the generation was up almost 11.3% this time around. Plant availability factor too was quite high at 83.7%. Parbati 2, 800 megawatts, was commissioned in the quarter gone by. They expect further commissioning by Q1 FY27, and along with that, some important guidance in terms of Subansiri. They have said that they target the full commissioning of Subansiri by FY27, with all 3 units to come online in FY26, going with a green on both of these names.
All right. Vivek, thank you very much for that. Suzlon management joins us, Mr. Chalsani, at 9 o'clock to talk about, of course, the numbers, the outlook, etc. as well. PI Industries is the next one we want to focus on. Ria's got details here. Ria, good morning.
Good morning. A weak quarter for PI Industries this time around, well below the estimates that we were working with. Revenue has declined by around 8% versus estimates of 8% growth for quarter 1. EBITDA and net profit have declined by 11% each versus estimates of 5% and 1% growth respectively. Margins although have been largely in line with estimates at around 27%. In terms of the agri-chem exports, those have seen a 14% decline in revenues as well as a 9% decline in volumes. The domestic revenue though grew by around 6% with a volume volume growth of 7% for the domestic business. The biologicals product business, though, the revenue declined by around 38% on a year-on-year basis, and this was largely due to the abrupt regulatory suspension of sales for biologicals in June for the entire industry. Pharma revenues were up around 186% on a year-on-year basis off a very low base, but remember, this is still below the estimates of over 200% growth that the street was working with. Now, going forward, the company has said that destocking of inventories is expected to be normalized by the second half of 2025. And in terms of the CSM exports, they have a cautiously optimistic stance despite destocking of inventory amid the uncertain US tariff regime.
Thank you very much for that. Let's now go across to Mangalam to tell us how Nika performed in Q1. Look good?
Well, Nika did look good. You know, the street had already the Nika's first quarter update, and after that, we were expecting some margin improvement, and that's exactly what has happened. Not to the extent that the street would have liked, but, you know, given the sort of expansion that we've seen in the beauty business and the contained losses in the fashion business, the street may go with a positive move on Nika. 23% revenue growth, the reported EBITDA grew 46%, and the net profit grew 79%. Beauty business, there was a revenue growth of 24% and an EBIT margin expansion of nearly 30 basis points. In the fashion business, while there was a revenue growth of 15%, it was lower than expected. The EBITDA margins actually, or the losses got contained from 30 crore loss. It came down to 27 crore. Remember, in its annual investor day, the company is targeting this business to break even by the end of this year itself. The gross merchandise value for the company grew at 26%, and more importantly, their own brands, which are high gross margins, House of Nika, there the GMV grew at 70%, much above the company's own sustainable growth target of 30%.
All right, Mangalam, thanks a lot for that, and good to see you back to better fitness today. Well, let's hop across to Ria. She's here to tell us about Kochi Shipyard. Ria?
Well, yes, very good set coming in for Kochi Shipyard this time around, well above brokerage estimates. The revenue growth this time around was around 38% versus estimates of 14%, and this was likely driven by the execution of the ASW Corvette and the NGMV projects and the higher contribution from the ship repair segment. EBITDA up around 28% versus estimates of a 17% decline, so very good growth on this front as well. Margins also at 23.9%, well above the estimates that we were working with. Net profit has improved by 4% on a year-on-year basis versus the estimates of a 26% decline. This time around, the profitability improvement that we've seen has been led by the higher contribution of the ship repair business, which is the high margin segment for the company. This time around, it has contributed around 64% to the revenue versus about 34% in Q1 of last year. So the revenue mix has actually flipped completely for the company, and this has also led to a margin improvement of around 100 basis points for the ship repair segment. Material cost to sales this time around has also come down to 29% versus 39% earlier. So that has also aided profitability for the company. For the shipbuilding segment, margins have dropped to around 5% versus about 21% last year. So good numbers this time around for Kochi Shipyard, despite the sharp increases that we've seen in the subcontracting expenses as well as provisions on a year-on-year basis. But remember, on both of these metrics, they have actually fallen sharply on a sequential basis.
All right, Ria, thank you very much for that. NSDL, the stock has been jumping and galloping since listing. Came to the market 850 handle or so, and this, of course, moved up very, very sharply from there. Vamakshi is here with details. Vamakshi, morning.
Well, good morning, Prashant. You know, NSDL has reported a mixed set of numbers this time around. The revenues declined by almost 14% on a quarter-on-quarter basis. The fall in the operating expenses was much higher at almost 20.5%, which is why the EBITDA margins have contracted by around 550 basis points to, rather the EBITDA margins have expanded to by 543 basis points to 30.5%. The EBITDA is up almost 4.4% sequentially, and the net profit is seeing a jump of almost 8% quarter-on-quarter, and there is some support coming in from other income as well, which saw an uptick of almost 15% sequentially. Now, largely, let's also look at how the different segments for the company performed. The depository business, which is the core business of the company, actually saw a degrowth of almost 3.4%. The larger hit came in on the banking, which is the NSDL Payments Bank, which saw a downtick of almost 26% quarter-on-quarter. Database management too did not do too well. As far as EBIT margins are concerned, margins expanded across the board, mostly for database management, which expanded by 450 odd points. Depository also saw an expansion of around 300 basis points. But when we look at the valuation for NSDL, PE ratio is currently at 72 times, which is much higher as compared to CDSL's 53 times. So therefore, given the high valuations, mixed set of numbers, going with the red for this counter.
Thank you very much for that. Moving on to PTM. Some relief coming in for PTM on the regulatory front, Ritu?
That's right, Reema, because RBI has granted them an in-principle authorization to their 100% owned subsidiary, PTM Payment Services Limited, which is PPSL, to operate as an online payment aggregator. And it has also lifted the ban on new merchant onboarding, which had been in place since November of 2022. So this ends, nearly a 3-year wait for Paytm's license and, of course, removes a key overhang on the payment gateway business. Now, remember, Paytm had reapplied for this license in September last year after the initial application was returned in 2022. Now, keep in mind, this payment segment is quite crowded. There's more than 50 licensed players, but Paytm has the leverage and it can scale that 1.3 crore merchant base it already has to be more competitive in the market. The approval also comes just days after Paytm's Chinese investor Antfin completely exited the company, selling the remaining 5.8% stake. But keep in mind, this nod is not unconditional. PPSL will have to complete a system and cybersecurity audit within 6 months or risk losing the license. That said, an important development for Paytm and definitely sentimentally positive.
Can we see more relaxations coming through, right, on the regulatory front? And that's a conversation we'll have with Ritu as we go on. But this is definitely good news for Paytm. Ritu, thanks very much for that. Manisha is now joining in with a roundup of all the action from the commodity space. Manisha, good morning.
Morning, and thank you for that, Prashant. I'll start with the crude oil prices because we are looking at a 2-month lows onto this one. Well, the U.S. crude inventories have risen. EIA says that the U.S. crude oil output will peak at a record 3.4 million barrels per day in this year itself. Also, OPEC has not changed demand for 2025, and the U.S. Department of Energy is talking about a global surplus estimated at 1.7 million barrels per day in this year itself. So everywhere that you look, there's no reason for the crude oil prices to go higher, is the reason you've seen constant declines onto this one. What is doing well, though, has been the metal prices. Gold is supportive, with the markets working with a probability of around 93% for a U.S. Fed rate cut in the month of September. We've seen silver prices gain some support as well. Copper, after that crash that we saw in the previous week, is now trading at a 1-week highs. Aluminum and zinc as well trading 0.5 to 1% on the higher side. So metals, precious and industrial, all doing quite well right now.
Thank you very much for that. Let's get into a short break. On the other side, let's invite the management of Balrampur Chinis to talk about their Q1 earnings.
Welcome back. You're tuned into Bazaar Morning Call. Well, let's focus on Balrampur Chini Mills. That's the company on our radar. The Q1 sugar volumes increased while realizations also improved, but crushing decline. Let's discuss the past quarter with Mr. Pramod Patwari, the CFO of the company. Hi, sir. Good morning. Always a pleasure to have you on the show. Good to speak to you after a while. Well, the first quarter, crushing has been lower. It's typically off-season, so that's on expected lines. But what's the outlook for cane crushing, if you could help us out? What kind of recovery? And also realizations, the last time around, you said at around 41 rupees per kg. You don't think it's really sustainable. So where is that number headed?
Good morning. Yeah, as far as the upcoming sugar season is concerned, we are witnessing lower acreage in UP. So for a UP basis, the overall cane availability should be at par with last year as per the initial estimates. However, at a country level, the production from Maharashtra and Karnataka is very high. So we are looking at a gross sugar production of around 35 million ton, which was around 29.5 million ton last year. So there is a strong case for very high diversion of sugar into ethanol, which could be in the region of around 4.5 million ton. This will further leave a room for exports. So the policy on export front will be extremely crucial, as well as the timing. As far as Balrampur Chini is concerned, our cane area is slightly lower than last year, but on the basis of the current monsoon conditions, we are hopeful that yield should be better this time. And if this kind of weather continues for another 2 to 3 months, then we will get a better visibility with respect to recovery. It is too early to predict any number as far as the recoveries are concerned. On the realizations front, as I said, realizations will be a function of sugar availability to the country. At a country level, the production or the availability is very high. So going forward, the realizations will depend upon the government policy as well as the timing. What kind of ethanol price increase the government gives, as well as the timing of the exports.
Sir, do you export to the US markets?
No, we don't export to the US.
Okay. So no impact then on account of the Trump tariffs, right?
Right.
Got that. Could you give us an indication, some numbers in terms of what you might do in terms of sugar sales volumes for the full year, and even a number on realization? I know Nigel was trying to get to that, but is there some number we could work with?
It will be difficult to give any number because we are dependent upon the government policy. The country level domestic consumption in the sugar season 24-25 is expected to be around 28 million ton, and next year it can be around 28.5 million ton. So our quota for domestic release will be a function or in proportion to that only. This year, Diwali is early, so maybe the crushing will start 2 to 3 weeks early. Government will have a better visibility as far as the availability of sugar in the country is concerned. So if the decision on the export is taken at an appropriate time, then the revenue from the exports may also kick in the last quarter of this financial year. So that is very important. Currently, we are selling sugar at around 40.5 rupees per kg. And we are expecting that end inventory of sugar at the country on 30th September will be around 5.2 million ton. So going by this number, for the period up to September, October, availability of sugar is there. So we are not seeing any run up in the prices, but this prices should sustain by that till that time.
Mr. Patwari, hi, good morning.
Good morning.
Ethanol, sir, could you give us a sense on volumes? For ethanol, Mr. Patwari, could you give us a sense on volumes?
Yeah, if we are expecting around 4 to 5% increase in cane availability for our company, so going by that number, we are expecting that for the next ethanol year, which will start from November and end on October, maybe around 27 to 28 crores liter of ethanol is a possibility for us. But obviously, that will also depend upon the pricing of the ethanol.
Right. There has been some chatter with 20% blending, which has already been achieved. That number perhaps needs to go up, Mr. Patwari. Anything you've heard with regards to that?
So the current blending the government has achieved 5 years in advance. This is all in accordance with the BIS standards. So currently the government is looking or working with the formation or the fixation of the BIS standards for E20, E25, E27 or E30, which will take some time, maybe another 5-6 months. Till November 2026, I think we would continue to be in the region of around 20% ethanol blending.
Okay, November 2026, and after that, we may see. Could you give us an update on the PLA manufacturing venture as well? I think give us a status update.
Yeah, the physical progress of the project underway is as per schedule as of now. We have already spent around 925 crores out of the project cost of 2850 crores. Financial tie-up has been done. Most of the orders for the large lead items have already been placed. We are in the process of developing the market now. So we have started seeding the market by importing the PLA and selling. So project is as per schedule as of now.
And it kicks off, according to your earlier guidance, when, sir?
In the last quarter of FY27.
Okay,
maybe October 26 or November 26.
October 26 or November?
26.
Okay, 26, 2026 basically.
Absolutely.
All right, so third quarter of 27 basically is what you're looking at. Fair enough. We'll leave it there, sir. Thank you very much for joining us. Good speaking with you, and a quick snapshot view across the business verticals at Balrampur Chini. Thank you indeed. It's 560, 561 on Balrampur. We'll take a quick commercial break here. We're going to come back. We'll connect with Devin Choksi on the other side. Stay tuned. Welcome back. Devin Chokshi is with us. Devin, thanks for waiting. Appreciate your time here as always. Just wanted a quick word, Devin, to kick off the conversation on PTM. The aggregator license is in. They can onboard new merchants. Is it in the price? Stock's done very well. Or do you think we should expect more regulatory easing? I mean, there is a broader, larger context to this as well. It's not just about PTM. It is about, the ANFIN getting out. Perhaps there is the US angle as well, right? With regards to, maybe the government takes a view that we don't want, American firms to have a very large share of the payment market. We want homegrown businesses as well. So the PayTM fits right in. What are your thoughts, Devin?
Yeah, Prashant, good morning. Well, I think from a technology perspective, yes, I think the company is well settled. I think as far as the payment solutions are concerned on different aspects. Not completely sure as to, I think this is going to be a game changer for the company as a whole. In my viewpoint, I think if one has to look at this entire business and whatever we understood from it, I find that I think the higher amount of game changer possibilities could be when India starts providing, I think, the solutions on the payment side to other parts of the world. I think some of the countries particularly looking forward to this kind of a solution. And that's where I think our market can probably expand. At this point of time, we do not have any view whether PayTM is going to move into that territory. But certainly, I think the opportunity-wise, I think the things could possibly move in a positive direction. That's what we believe. As far as I think the outlook on the price concerned, I think at this point of time, based on the current fundamentals and the revenue generation that company has done along with profits, I feel everything is priced in. Maybe I think one will have to wait and see how the revenue side increases and so along with the profit.
Devin, what about NSDL? Fantastic run-up post-listing. We got the Q1 numbers, and even in the core depository business, we've seen a drop in the company's revenues, 3.5% decline quarter-on-quarter. It's been losing market share to CDSL, and plus in the current quarter, their banking business was a bit of a drag. Considering that the valuations now are quite expensive, more than 70 times forward multiple, what would the advice be on NSDL?
Yeah, so I think both CDSL and NSDL, both of them are very strong market intermediaries, and both of them will have, I think, a large part of the role to play. NSDL has recently crossed 4 crore accounts. CDSL is, I think, 16 crore, so 20 crore accounts in depository already in the country, as we see today. And the volume-wise, the account number-wise, I think CDSL definitely remains a leader here. But the size of assets which are in the depository, I think where the NSDL has a large market share in this particular category. So I think some part of the business definitely, I think, looks attractive for sure. In my viewpoint, a couple of things in this result. A, the cost structure has come under control, and that has resulted into better profitability. Should the volume start speaking up in the market overall, then in my viewpoint, I think the business could possibly give better than expected numbers as far as I think the revenue with profit is concerned. Yes, currently I agree that 75 times on paid basis, the price earning ratio is definitely expensive. And for it to make more sense, I think somewhere in the vicinity of around 45 to 50 times price earning ratio, this could become an attractive proposition from the investment perspective.
Got that. Any thoughts, Devin, on Astral, which sold off very sharply yesterday?
Well, again, I think the cyclical factor which affected I think, many of the plastic processors, which is a PVC price. And certainly, I think sudden drop in the PVC price led to inventory-led loss also in the books of the companies. It could be, in my viewpoint, I think it was probably one of the factor in the I think in the quarterly results. I believe that given the strong demand that we have for the pipes, in particular, and leadership the Astral is enjoying today, I believe that I think subsequent quarters should be relatively, I think, much stronger quarters, particularly with the festive season setting in now in the second quarter of the financial year. I believe that I think in the second half of the financial year, we should be seeing significantly large turnaround for the business as we are seeing. Maybe the volatility in the PVC prices has taken a toll in the first quarter, which may not be the case I think, in subsequent quarters. So on dips and corrections, I think the stock should become an attractive buy proposition.
All right. A couple of other questions, Devin, but we'll chat again. Thanks very much for joining us for now. Appreciate you sort of taking out the time and being here on CNBC TV18. We'll take a quick commercial break here. Some technical trades and focus with Mitesh and Sudarshan. Stay with us. Okay, welcome back. Let's welcome in Sudarshan and Mitesh, who are with us with what they'd want you to do with regards to specific trades today. There's news at the bottom of the screen. Anthony Waste has won 2 contracts worth 1,600 crores. That's a large order. So that's Anthony Waste for your stocks, of course, underperformed quite a bit. Gentlemen, good morning. Great to have both of you here, Sudarshan and Mitesh. Sudarshan, how would you approach things? I mean, Monday, 200 points. Yesterday was minus 100. Today, implied open is plus 100. What's the trade? Indices first.
Well, for today, the trade is to look for a minor dip and go long. The chances are that the rally we see today could extend all the way till tomorrow afternoon when positions should be closed. So for the very short-term trader, for the intraday trader, for the swing trader looking for a 2-day trade, identify a small dip, not large, or a trading range in the day, early in the day, and go long. Keep a 100-point stop loss. Next week would be different, but that's something we can discuss tomorrow.
Yeah. Mitesh, what about you? Indices first?
So on the index, I think, there's some process of consolidation which has begun. See, we've been declining and, I've advocated having some put spreads. But anything close to this 24, 400, 350 zone, there's a big and huge gap, which the Nifty left when it was going on the upside on the 12th of May. Now, around that gap, strong support will come in. There's also retracement area and a couple of weekly averages. So I think we might see some base building around this 24, 350 mark, give and take 50 points. But there's no strength or sign of a reversal, which means that on the upside, close to about 24,750, and yesterday we got a high of 24,703. Around those levels, you will see supply emerge. So I think we are settling in for a range kind of a trade for the next few days. Only if we see some kind of a reversal sign, then I'll assume that a possibility of an upward breakout happens. But till then, try to buy near the lower end of the range with a 50-70 point stop and try to take profits as you get closer to about 24,700, 750 levels.
Okay, got that. Sudarshan, what are your trades?
Well, it's an all-buy list. NHPC is a buy with a stop under 82. Indian hotels, in fact, the entire hotel group, that hospitality sector itself is a buy. So Indian hotels is a buy with a stop under 733. Tata Powers now emerges out of a consolidation. Consider buying, stop under 376. And finally, M&M Finance. M&M Finance is a buy under 242 with a stop at 252. And you could also consider M&M Finance as a positional trade.
Okay. M&M Finance is a positional trade as well. Mitesh, what about you?
I also have buying calls today. A buy on BHEL. Again, the stock is at a gap support area, so could bounce back. Buy here with a stop below 218.5. Look for 230 kind of a target. Coal India is a buy with a stop at 382 for a target of 395. Buy on NTPC with a stop at 337. Look for a small target of 348, 350 on the upside. And DMart or Revenue Supermarts is the final buy call. Keep a stop below 4,200. Look for targets of 4,350.
Okay, all right. Mitesh and Sudarshan, thank you very much, both of you, for joining us. Good speaking with you with those trades. We'll talk again in about 10 minutes or so. The pre-open is kicked off, 21 points on the Nifty. The sensex is up about 110 points or so. Suzlon reported numbers, and we have the management with us to take us through the earnings. JP Chalsani is Chief Executive Officer at the Suzlon Group. Mr. Chalsani, good to have you with us here. Not in our studios like the last time, but we'll get to the numbers and the outlook, etc. in a bit. But there's another news item which I should start with, which is, of course, your CFO putting in his papers. He's someone who joined you in 2021 and has been, with you as you sort of engineered this turnaround at Suzlon, massive turnaround at Suzlon. Could you give us a sense of what happened? Why is Mr. Modi leaving?
I thought it's a bold news. You people broke it almost 24 hours back. Anyway, having said that, Prashant Himanshu had been a great colleague, and then he was integral part of our growth story, as you said, for the last 4 years. We now reached the stage where we are on the right momentum. If you look at it, we become debt free. We got 600 crores cash, 7,000 crores of working capital, and the credit rating has been consistently moving up with the latest of A+. Obviously, at this stage, for him, having done so much, the question is the next growth opportunities. He had an options to move the business in Suzlon or move out into financial sector. So obviously, after careful consideration, this is what is decided. He, as he said in his resignation, is always available to us, and we continue to tap him. But as far as the company is concerned, because as I said that we're in the right track, right momentum, I don't see any sort of an impact. And the next person who has to come in as a successor to Group CFO is also in the advanced stage of appointment. Yes, we will miss him definitely, but then the company would move on the growth momentum what we're setting.
Was there obviously, natural to assume that you'd aspire to, CFO, you'd aspire for a CEO level position, right? Was that one of the factors?
See, it is individual decisions. Obviously, you need to talk to Himanshu why he took this decision, but he had the opportunities to grow in the business in Suzlon as well. Okay. So therefore, the question is that whether you want to move on the business or you want to stay in the financial services and grow. Careful consideration after a couple of months, he decided to grow in the financial sector.
And the new CEO.
Then you need to check with him beyond that, obviously. But as I said, that one is he has been a great colleague for me.
Sure, absolutely, Mr. Jalhani, new CFO in how much time?
It's an advance. When? Actually, Prashant, we started the search quite some time back because there is nothing beyond CFO for him, so we wanted to move into the business. So it's an advanced stage. You will hear from us the appointment. So.
Okay. From the family or an outsider, professional?
It's a professional. We always had a
professional. Okay.
I don't think company ever had a family CFO till now.
Okay, got that. Sir, in just post your Q4 numbers, in the early part of June, there was this large promoter block which took place. And I think it was about, the promoter stake came down from 13.2 to 11.8%. The street was surprised because your Q4 was good. You gave a strong guidance for FY26, 60% growth across all key parameters. What prompted that? And is the promoter looking to sell more stake?
Rima, one thing let me confirm as a group CEO, their commitment is there. Was there and will continue to be there. They are deeply involved in the business. It is their baby. So therefore, there is no issue with respect to that. As far as the block sale is concerned, obviously, they have been in the company for so long. They never had the decent dividends. I think there's no other options. So therefore, it's more for cash generation at one time. But otherwise, there's absolutely no the thing like, to forward sale or anything else. I can reconfirm again with all my seriousness that there is no impact on their long-term commitment. Both the brothers are extremely hands-on the business as well as on the policy level, and they will continue to be so.
Okay. Just some more business questions. Does the 60% growth target continue for FY26, something you shared last time? And what will you end FY26 in terms of an order book? And what kind of visibility does it give you?
Yeah, the first question is that 60% is what we gave guidance end of last quarter, and we stand by that. The 60% on an annual basis on all key parameters, we would stand by that guidance. As far as the order book is concerned, right now we're at 5.7 closing order book. Okay, it's an extremely strong order book. The number of the proposals being under discussion, I don't want to put a number to where we will end the year end, but one thing I want to say is in the last 10 consecutive quarters, our closing order book has been higher than the opening order book quarter-wise, in spite of the fact that our supplies have increasing from quarter to quarter. Even after supplying it, our closing order book has been higher. So therefore, it clearly shows that we are in sustainable growth, and order book is not really a concern at this stage. We will end up with a very strong order book.
Can you give us a number, sir, by end of 26?
No, we're at 5.7, Prashant. I can definitely tell you that it will be more than that.
Okay, it'll be higher than what you start as you have over the last couple of years. These amended ALMM norms, you're the sole integrated domestic player in many categories. How much of an opportunity is this?
See, there are three aspects. First of all, that we completely comply with the regulations that came in. Okay, whether it's in terms of sourcing or in terms of R&D or in terms of operation maintenance, data control, and everything. And as far as the sourcing is concerned, what it does, Prashant, is that we were at a little bit of disadvantageous position compared earlier because there was cheaper imports happening in the country. Whereas we looked at domestic plus, also more importantly, looked at the quality because we offer 25-year service. We got to be sure that our equipment operates for 25 years. In the service period, we actually replace parts if they fail. This, what it does is that it provides a level playing field for everybody. I know I'm saying this as an Indian company in India that we got a level playing field now. Everybody has to pick from the listed wind turbine component sources only. And that listing, as they said, that would be very strict in terms of inspection, quality and everything. So it's good for the sector, good for us definitely.
Thank you, Mr. Chalthani, for joining in. Short conversation, but we're just heading into the pre-opening right now. Thank you for joining in. That's the word coming in from Suzlon. Let's go across to Sudarshan now for his 9:10 call.
Well, buy Indian Hotel with a stop under 733.
Indian Hotel buy. Mitesh, yours?
You go with the buy on Coal India for targets of 395.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's get to a couple of stocks and sectors that will be in focus. Solar manufacturers, they're going to be in focus today. Vivek joins us to tell us exactly why. Vivek?
Well, that's right. A development to take note of. Number one, it's actually a consortium of US solar manufacturing companies, cells, modules, panels that earlier had petitioned for both an anti-dumping duty as well as a countervailing duty to be imposed on Indian exports along with 2 other countries. So now the US Department of Commerce has initiated this particular probe into both solar cells, modules as well as panels. So there are 3 countries that are part of this particular probe: India, Indonesia as well as Laos. Now what is the claim? The claim is that these companies from these countries actually benefit from unfair government subsidies, and the sale price at which they sell in the US market is lower than the fair market prices which the US companies produce and sell at. So now when you're looking at the impact, currently the impact will be determined by the final outcome of this particular probe, but any adverse ruling may lead to one-time large penalties that these companies will have to face. So which are the companies that will remain in focus? Well, the company that will be impacted the most is Waaree. Over 40% of the order book is from exports, mainly into the US markets. 2 other companies do export, very minimal. Premier Energies have continuously told us that the order book mainly is in the domestic market, and also Adani Energy does go ahead and export, Adani Enterprises, does export some solar products into the US market. So these companies will be impacted. When it comes to Waaree, remember the company will also face the double whammy of the 50% tariff that the USA has imposed on India. That could be offset by a 1.6 gigawatt facility that the company is planning to set up in the US market. Overall, a slightly negative development, but key details are still awaited.
All right. Vivek, thanks very much for that. Flattish kind of start as far as Waaree and Premier, etc. go. Suzlon is coming up at the bottom of the screen. Landmark Cars is a big one, right? 6.5% higher on Landmark Cars in the pre-open session. A very strong EBITDA. Look at Shakti Pumps. I mean, I think the high was about $1,100, fell to about $750 or so. So it's coming back up after this new order which has come through. Senco is another one. I mean, very strong numbers from Senco. 70% growth in EBITDA. And we'll have the management coming on later. So lots of movers, individual stock-specific movers coming through. One more, Honasa is something you should pay attention to. Mangalam is here with reasons. Mangalam.
Well, there are a couple of quarters that was weak for Honasa, and that led to the big decline that we saw in the company's stock price. But it seems like these numbers tell you that maybe the company is turning around a corner. Why do I say that? Because the reported revenues grew 7.5%. The EBITDA declined by 1%. Brokerages were expecting a much bigger decline to the tune of almost 15 to 20% in the company's EBITDA, and the margins came in at 7.7% versus 8.3%. Net profit saw a marginal growth year on year, but that's better than a big gash that the street was expecting. What's good is that the revenues grew 7.5% despite a near 200 basis point impact on sunscreen due to unseasonal rains, and the underlying volume growth has been 10.5%, which is much higher than all the others in the industry. And there has been a 264 basis points improvement in EBITDA margins quarter on quarter, and their focus categories, which is about 80% of their sales, grew in double digits as well. So all these factors working well for Honasa. The question is, has the company turned the quarter? We have brokerages which are positive on the stock, but Jefferies puts it best. They say it's a high-risk, high-reward story right now.
And CLSA today has upgraded Honasa to an outperform and raised the target price to 333. 5% up on Honasa in pre-open. And you also have Nika giving it company, again, a 5% up move. So some of these companies higher.
Just one more stock, NMDC Steel. From the time it's listed, that's from the time it got demerged from NMDC. It's been delivering losses. First quarter, it's seen revenue ramp up that will be supported partly by pricing. Also, I think utilization levels could have improved. So because of that, the stock that had gone all the way to around 70 rupees, it's come back down to around 35. But this morning, opening well in the green because they have turned profitable. Interesting to see whether they can sustain this and what the government decides to do with this asset, because in the past they've spoken about divesting it.
All right. Well, 0.4%. Look at the start. I mean. 24,487, 0.4 lower.
We'll get those. Yeah, that's the number.
It's about 1/3% higher. Those are the rates, the first rates which are coming through. 89 points. The Nifty Bank is down about, is up about 0.4%, 55,267. The mid-cap index is up 0.5. The small-cap index is coming up with a higher rate as well. So this is a decent start, almost at 24,600 at this point in time. Market breadth on the Nifty 50 pack heat map perhaps gives you a sense of where we are starting before we dive straight into individual names. Almost 100-point pop and 300-point pop on Nifty sensex respectively. It's all in the green, except three names which are starting lower. Apollo, Hindalco, Power Grid are some of the large cap names. And there are three, Tech Mahindra, Axis and Titan, which are in the red. Prima.
By the way, before we get to the large cap action, three mid caps. One is Yatra, another 5% up move on Yatra Online. This week, the stock is up 50%. So continues to raise post its numbers. Honasa and Nika, the two stocks. Honasa now up 10%, Nika up nearly 5%. Getting to the large cap action, well, it's earnings reactions playing out. So Apollo Hospitals is your top gainer, so that's up nearly 4.5%. OMGC has a positive tick to begin trade with. And we should get Hindalco. Came out with numbers towards the close of markets yesterday, and that too has started off trade on a positive note. Power Grid, BEL, Tata Motors, Adani Enterprises, these are some of the gainers in today's trade. On the way down, not too many. You've got a Tech Mahindra, but that was a star yesterday, up 2%, so retreating a bit. Axis Bank, Wipro on the flatter side. All in all, it's 100 points up now on the Nifty. Nifty once again trying to get towards that 24,600 mark. Sensex is open with a gain of about 300 points. Mid-caps are outperforming.
Well, that's right, but plenty of stocks actually doing well. Honasa, as you pointed out, Nika is flying away. Senco as well is up closer on 4 to around 10%. All these stocks doing very, very well. PTM, that's up 3.5%. That's sentiment positive that's coming from them. JM Financial, yesterday intraday the stocks did see some profit taking, but that's done well yet again. So big up move is what we're seeing on that particular name. On the flip side, you have Jupiter Wagons, that's under some pressure. That's down closer around 3.5% or thereabouts. We'll be joined by the management shortly, to detail those numbers. Anthony Waste Handling, that's another stock that's popped up in trade. It's up closer on 7.5%. So massive move is what we're seeing out there. Big move on decent volumes as well. And, I think Dream Folks, that one has been, locked in upper circuit for the last few trading sessions. So that's doing quite well. What's not doing too well, I think one stock that I'm looking at is Aarti Pharma. That one is down closer on 9%. So slam dunk on that one. Rupa as well is down decent volumes, 1.5 lakh shares already traded. That's down closer on 8%. Both those two have come in for some profit taking. So keep an eye out on those names as well. But it's a good start to trade, guys. Sustaining this opening gap up is going to be very, very important from the bulls' perspective.
Okay, all right. Let's just look at the first rates, which are sort of settling down. It's a triple-digit gain, 24,590 on the index. And you've got the mid-cap index and the small-cap indices, etc., which are going to come up on your screens as well. What do we have, apart from what we've kind of mentioned? I think Alchem is recovering a little bit. Alchem was a big casual, I think it was about 6% yesterday, Alchem. So from the close of about 4,800, it left yesterday at 5,150 and it's at about 53. The high today, by the way, has been about almost 5,400. So it's following through. Trans Rail is up about 3% and has got large size volumes at this point in time. I mentioned Shakti Pumps back at almost 900 rupees. I think the high was 899 today. It's cooled off a little bit, but still 4% on it. Premier Explosives, I don't know if you mentioned it, 11%, 12% on Premier Explosives. Very large sized volumes at this point. So 476 on Premier Explosives. Look at, yeah, there you go. And 30,000 shares as well. Look at Techno Electric, 8% move on Techno Electric, 1,410. Stocks at about 1,473. So it's a pretty large size move coming through there. And you could look at a few other names, but volumes start to thin out. This is pretty much the biggest volume-led pack out there. Suzlon is down 3%, and we just had the management with us. Suzlon is the number one volume-led loser coming through on the NSE. 21 million shares, 22 million shares from on Suzlon at this stage. You know, Sonata Software was a huge volume-led gainer yesterday by close. It's seeing some profit booking. There was no news really on the, in terms of what led to the big move, but it's down 2% as we start this particular session. All right, let's welcome in Manish Gunwani, who's with us. He's a market master of the day, head of equity at Bandhan Asset Management Company. Manish, good morning. Great to have you with us here. Thank you for joining us. You know, one viewpoint is that since late October last year, the market here, you look at MSCI India, for example, it's underperformed MSCI World by about 20% dollar terms. So one view is that, you know, you're going to come to a point where some of this underperformance is going to give us a bit of a fillip, a bit of a spring when market starts to move higher. But you need some triggers, right, for that to happen. What are those going to be, according to you, Manish, as you look ahead?
So if I think about globally, I guess the biggest trigger can, of course, be a renewed weakness in dollar. The dollar's been consolidating post the 10% fall we saw over the last 4-5 months. And I guess part of the reasons emerging markets are doing well is the dollar looks weak, while it's not fallen recently, but it does seem to have its challenges fundamentally. On the domestic side, I think last 12 months have seen a slowdown in the economy versus expectations. And I think what can probably turn this around, hopefully, is falling interest rates, tax cuts playing through, maybe pay commission in a few quarters. So we're quite hopeful that the slowdown that we've seen over the last 12 months will get reversed in a sense over the next 2-3 quarters. So I think once you start seeing some traction in nominal GDP, I think India has seen a fairly decent fall in nominal GDP coming down to single digits. I think it's important to get it back to
Oops.
I think we lost the line there.
Monetary side, we've seen similar, right? So on the monetary side, we've seen significant stimulus. So we are hopeful that once we see the nominal GDP come back, the outlook on earnings will improve, and we should then see the market resume its uptrend.
India has greatly underperformed the MSCI emerging markets, right, in the last 1 year. Now you're saying that things will improve from here on. What would you bet on? What would be the extent of the improvement? You know, for instance, we were just, reading out a call from Mahesh Nandurkar from Jefferies, and he believes that we will see a bounce, again, for the same reasons that you articulated, but the bounce may not sustain for long due to weak value versus growth equation and equity supply concerns. Now, in the last 1 year, Manish, we've already seen no return for the Indian equity markets.
So I think we should not be focused just on last 2-3 quarters. If you see on a 3-5 year basis, Indian markets have healthily outperformed emerging markets. And once that extent of outperformance happens, there'll be phases where mean reversion happens. So today, obviously, China, Korea, Taiwan, they probably got very cheap at the end of last calendar year. And this year, they they will outperform, I guess, just by mean reversion. I think India remains a bit of an insulated story in the sense that, look, foreign investors don't play India to play US consumer or something like that, right? Or US tech, for example. We are a steadily growing, primarily domestic economy. To be fair, we have, as I said, undershot our expected growth over the last 12 to 15 months. I do hope that given the monetary stimulus, and I would think that even fiscal stimulus should start picking up. I think the kind of CPI number we saw yesterday, for example, just shows how much space we have in terms of the macro stability has gone to an extent where I think it's given you a lot of space to stimulate the economy. And I hope we see some strong policy action as a mix of fiscal and monetary, because we definitely, I think, should be, as a country, aiming for double-digit nominal GDP growth. And given that our current account is in a brilliant shape, inflation is in brilliant shape, there's not excess leverage in banking or household sector, I think there is a lot of space to stimulate this economy and get growth back.
Hi, Manish. Good to see you. Where do you generate alpha, though, in this sort of market? In the past, you've spoken about a couple of sectors. I recall towards the end of last calendar year, you were talking about metals, oil and gas as well. Those could be themes that actually you could make better returns. Do you stick to that, or do you think that things have changed? In the metal space itself, if China is going to recover, since their regulators there are peppering the economy, maybe it could be better times. What's your gut on it?
Yeah, I think metals worth a risk-reward trade. See, metal is not a buy and hold sector, but given the expectation we have, at least, of medium-term dollar being weak and China probably bottoming out, and the fact that just bottom up when you see the cost of extracting and producing these metals versus the current market price, a lot of these industrial metals are definitely cheap. So I think metals is a good risk-reward sector. I think consumption at the mass level, while it may not be a very structural buy and hold story, but given this phase of last 3-4 years where a lot of consumption stocks have been flattish, I think, as I mentioned last time, there are a lot of brand companies which are available at 1 to 3 time kind of sales. Typically in India, those are very good entry points for consumption stories. And while when you play a cycle, nothing is clear when it will play out. So you can't be 100% sure of a strong consumption cycle coming through. But I think the risk reward is good. I think as I said, the valuations are cheap, expectations are low. So I think with a view of 12 to 18 months, because pay commission may come by that time, I think these consumption stocks which are cheap, I think that is a good theme. Structurally, I think the theme remains technology, the internet platforms. Those I think are good buy and hold stories, or any company which can produce medium to high-end products and services and export to the world, because there is a shortage of trained manpower globally. So whether it's engineering, pharma, if you can find a company which has got good R&D, has products with moat, and which can go global with those products and services, I think that those are two structural themes, I think, which we continue to believe in.
What about cement, Manish? In Q1, we saw good improvement in the realization across in the industry. Do you see competition being rational, and from here on, the EBITDA per ton improving or sustaining? And how is cement looking for you? Looking to you.
Personally, I'm not very hot in cement. I see cement as a trading sector because the penetration in India is very high. While it is consolidating a bit, it is not a sector with very secular pricing power to my mind. So you have to buy when things are down and you sell when things are good. Today, I think a lot of market participants are very bullish on cement. Valuations are high. Stocks have done well. So not a sector I would be very hot on at this point of time.
Okay, all right, Manish, very quickly, what about defense? It's got a longer runway and there's going to be plenty of focus both in India and globally, but valuations became too expensive. Some of them have corrected. What's your view?
Yeah, to be honest, we've not played this theme very aggressively. The macro has been always attractive in the sense that not only in India, but globally also, particularly in Europe, you're seeing defense budgets shoot up. If you see defense stocks globally have done well. But the point, what concerns us is just it's a one client sector. And the kind of margins we are seeing defense companies make, they are a bit surprising because they've gone up a lot. And of course, the P multiples, even on those higher margins, are very high. So it's not a sector I would be massively bullish on, to be honest.
Look at Aarti Pharma. I don't know if you've highlighted this, right? It's a large cut, 8.5% cut. So just pull the stock up, 784 on very large volumes, by the way, coming through. Coromandel is another one which is around about 4% or so. So that's a large cut, 4% loss there. And by the way, these are all within the top 5 volume-led losers list. Vari started slow. It started actually almost flat, but Vari is now number 2 volume-led gainer, 3% lower on Vari. And of course, we highlighted Suzlon, which is down almost 4.5% at this stage. So, stuff is moving on both sides, although with about 15 minutes of trade behind us, it's clearly advantage, gainers over decline. 70 points on the Nifty is what you have. Manish, thank you very much for joining us. Great speaking with you here on CNBC-TV18. Really appreciate it, as always. Nigel, but I think we have the management of BEML with us.
Well, that's right. Let's focus on BEML. The start to the year was actually muted, but what's the way ahead? We're joined by Mr. Shantanu Roy, the chairman and managing director of BEML. Hi, Mr. Roy. Good morning. Good to see you. And as always, well, the start to the year has been a little bit muted. So I wanted to ask you whether you want to revise any of the big 3 numbers you gave us last time around. You were talking about revenue growth of around 20%. For the start, it's been flattish. You were talking about margins improving by around 100-150 basis points. And the order book ending at around 22,000 crores for the year. All these 3 numbers do hold out?
Hi, Nigel. Good morning. Thank you for having me here. All the 3 numbers, it should remain the same. The 20% growth, the margins, as well as the order book. The order book has done pretty well. In the current financial year, we have already received orders of more than 2,900 crores, out of which 60% has come from rail metro, 20% each from mining and defense. We are at an all-time high as far as order book is concerned, 16,673 crores of orders, out of which rail metro makes up 65% of the order book, 26% is defense, and 9% is mining. So we have held on to the numbers in the first quarter. There have been some pluses, some gains, especially in terms of the margins getting better. Number 2 is the cost going down. We have held on to our employee remuneration. We have held on. We have reduced the inventory. This year, our major focus is on reducing the working capital, and for that, reduction in inventory, reduction in the debtors.
Mr. Roy, just to come in out there, actually the start to the year has been very, very feeble. There's not been any growth. But just to reiterate, you're saying that the remaining quarters onwards will be good, such that you achieve a 20% growth, right?
Yeah.
And because of the cost focus measures as well as operating leverage that will play out, margins this year will improve by around 150 basis points in comparison to last.
Yeah.
And order book goes to around 22,000 crores. That's right? Any particular reason why the last quarter then was flattish? Are you having some supply issues? Is there, any kind of difficulty you all experienced in the first quarter that it was so soft?
You see, there are 4 critical pillars in your organization to perform. First is the design, second is the supply chain, third is the capacity or capability in terms of human resource, and the plant and machinery. So here the material, that is the supply chain, has been of major concern to us. The supply chain is taking more time to stabilize than what we expected, especially for rail and metro, especially for the defense. And more so because we are indigenizing, and in the process, in our journey of indigenization, the supply chain has to not only be able to give the numbers, but also they are to come up and give the quality that is desired. So these two areas, the supply chain partners, the industry partners, have to ramp up. And that is where it is taking some more time to stabilize. In spite of that, it's a commendable effort, I should say, that we have held on to the numbers. But the second quarter onwards, and more so from the third quarter, when we expect the supply chain to further stabilize, and with more options coming our way, especially in the rail and metro, especially in the defense, in terms of the industry partners, the number of industry partners who will be onboarded by that time and who will be developed by that time. So things should go well. So this year, majorly, it is an execution challenge.
Okay, so that explains the
Orders will come, but execution is the main challenge.
Okay, and is that what explains even the Q1 softness, the execution?
Absolutely.
Got that. I think last time you spoke about one large Mumbai tender, which you were hoping to close about 30,000 crore. Is that correct? Which you were hopeful will close soon.
The tender,
it was a Mumbai MRVC train contract, about estimated, I think, 30,000 crore. You said expected to be floated soon, but likely execution will start only next year. Has that closed? What's happened on that front?
The MRVC tender is yet to be announced and yet to be floated. And once it is floated, it will take at least 6 to 8 months for the conclusion to be reached. And the execution will start 2 years, at least 2 years. It's a huge number. It's 2,856 cars to be precise. And it will be executed over at least 5 years. And the execution will start only after 2 years. But in our estimates, we have not considered the MRVC for the current year.
Okay. And exports, what was the contribution, Mr. Roy, of exports in the current quarter, and how will it trend going ahead in FY26?
Current quarter exports has not been very good, but in the second quarter, the exports contribution is going to go up to at least 3 to 4%. We are in the process of executing one big order from the CIS region. We expect some more orders. I'm talking about the mining and construction vertical. We expect some more orders which we'll be executing in the current financial year. We expect some orders for the rolling stock in exports for the first time. The order that we have recently received is only for the retrofitment and upgradation. But the new rolling stock order, we should expect some rolling stock orders in the export market in the current financial year, which will then go for execution in the next financial year.
Okay. What about the Vande Bharat order, sir?
Vande Bharat, already the order is there. We are in the process of executing. Okay. And very shortly, the second, third, fourth rakes will come out. And the balance 6 rakes also, in the coming 4 to 5 months, we will be completing that order.
So what is the contribution to the revenue, sir, in this year? Please go ahead.
The contribution of Vande Bharat to the revenue this year should be around 10%.
Got it. Got it. All right. So just want to clear out 2 numbers. One is on exports as a percentage of your mix in this 20% growth, that you're talking about. How much will exports stabilize at for the fiscal? And defense as well, you were guiding that, it will contribute more in this year. Yes. So as a percentage of the mix, what will it be?
You see, last year, defense contributed around 27%. This year, we are expecting defense to grow by at least 70 to 80%. That is what we are looking at, and we have the orders also. So contribution of defense should cross 30% this year. That is number one. As far as exports is concerned, the overall export, the physical export that we expect this year to the top line should be around 3 to 4%.
Okay, all right. Well, it's always a pleasure having you on the show, Mr. Roy. We're going to hold you to these numbers, but you're saying there were some supply issues in the first quarter. You're optimistic things recover from here on, and the three big numbers you're giving us, 20% growth, 150 basis points improvement in margins, and order book to around 22,000 crores. Thanks a lot for joining in here on CNBC TV18. The stock as well is perking up a little bit post that positive commentary.
Okay, by the way, for the markets, it's holding on to gains, about 0.25% higher on the Nifty, not 100 points up now, but about 80 points up. It's 24,568. Some of the gainers include NMDC Steel, Honasa now 12.5% higher, Apollo Hospitals 6% surge seen in Apollo Hospitals post the numbers. PTM is moving up smartly 5%, Shakti Pumps also higher. In fact, let's talk about Apollo Hospitals reacting to a strong set of Q1 numbers, healthy revenue growth, margin expansion. Sunita Reddy, Managing Director at Apollo Hospitals, is now with us on the show. Thank you very much, ma'am, for joining in. Strong performance in Q1, 15% revenue growth, EBITDA margins 14.6. Give us an overview what led to the growth in the current quarter and what would the guidance be for FY26? I think you're targeting a double-digit revenue growth. What will drive that?
So we grew 15% consolidated revenue. Numbers came in at 5,842 crores. But more importantly, EBITDA grew to 845 crores. So there's a significant improvement of 26%. And PAT at 433 crores, improvement of 42%. So headline numbers look good. More importantly, I think, the revenue has translated into profitability, into EBITDA. In the healthcare services business, there was 11% growth with 2,935 crores of revenue, representing 11% growth. EBITDA grew by 17% to 718 crores, and profits came in at 384 crores, representing an 18% growth in profits. So more importantly, healthcare margins were strong at 24.3%, representing an 83 basis points improvement over last year. Apollo Health and Diagnostics showed a healthy growth of 19% with the revenue of 430 crores, EBITDA at 40 crores, and a slightly negative PAT of 8 crores. But moving forward, I think, Apollo has established a primary care platform, a secondary, tertiary, as well as a great funnel for patients, an ecosystem for patients to move through the system using digital, which is our 24/7 app.
Ma'am, good morning. Prashant here. Strong numbers, and I think the market is responding to that. You said healthcare services revenue, that's hospital revenue went up 11%, right?
Yes, yes.
Whereas the AHLL and the Healthco are the ones which really led growth, 19-20% growth there. Was the hospital revenue growth at 11% a little softer than what you expected? And what can we expect here?
Yes, I think definitely it was a little bit softer than we expected. In terms of, moving forward, I expected to get back to 68%, 70%. And with that, the 14% improvement in revenue over the rest of the year. With this, we did have an impact of Bangladesh, where that impact is being mitigated in the second quarter. We found more patients, international patients, entering the system through the offices we've opened internationally. So, however, our payer mix continues to be strong, which is why our EBITDA is at 24.3%, and I think that is a very important factor. Insurance, private insurance. Go ahead.
Yeah. You're saying international patients will pick up substantially.
Yes.
What is that as a share now, ma'am?
Currently, it's about 5% of revenue. It was 7% of revenue, but in the North Indian destinations, it is picking up in our hospitals in the north. In Karnataka and Hyderabad, we're seeing a significant uplift. Chennai is starting to see international patients once again.
So you'd go back to 7% as a share?
Yes, we should.
By when, ma'am?
By the end of this year, we should be able to achieve 7%, moving towards 10% next year.
Right. So again, just to focus on the hospital business, inpatient and outpatient volumes were also maybe a little softer than what you thought, right? 3% and 9% respectively.
Yes, I think, yeah, you're right. The focus this year was on improving case mix, which is revenue from cardiology, oncology, orthopedics, gastroenterology, and this played out very well. We had an 8% increase in high-end tertiary care, which resulted in a 9% improvement in ARPP, which came in at 1,72,000 rupees.
Right. Got that. Could you give us a sense on the bed addition plans for the full year, ma'am? Where do we stand?
Yes. Currently, we're opening Pune with 250 beds by the third quarter. We're opening Defence Colony this quarter with 87 beds. Defence Colony is a fully focused women's healthcare, including onco unit. We have Sonapur in Calcutta with 250 beds, as well as Belapur. So Belapur is an acquisition. Bellinus Hospital, which is an acquisition in Bangalore with 150 beds. So these are the 4 hospitals that we will be opening in the third and fourth quarter of the year.
So in total, what are we looking at in terms of addition?
In terms of addition, we're looking at 500 beds added this year.
Okay.
Ma'am, you also announced the demerger of the omni-channel pharmacy Digital Health 24/7 into the new entity Apollo Health Tech. It's a move to unlock value for your shareholders. What's the status of the demerger right now?
It's been approved by the board. I think we've made the application to CCI and NCLT. This should take about 18 months. In about 18 months, we should be ready to announce, and following that AGM approval, we should be able to list.
Got that. But 18 months from here on, in terms of a timeline for listing.
Yes.
Okay. I know we've asked you this when the plan was formulated about the Apollo Health Tech guidance, 25,000 crore of a top line, 7% margins by FY27. Now, I mean, even since then, the street is still a bit circumspect on how you're going to get to these numbers. I mean, can you tell us how it's changed? What's changed in the last 3 months that makes you even more confident or equally confident?
No, I'm very confident because even if you look at the numbers, there was 2,747 crores of revenue from both online and offline. And in this, the most important 19% growth. EBITDA, however, grew more strongly at 25%. And this came in at 97 crores. Profits grew to 57 crores. So as I guide for the future, I think the change that's going to happen is with the integration of KeyMed, the back-end pharmacy. So you're already looking at a huge potential for almost doubling growth. And over a 3-year period with the integration, they should reach revenues of 25,000 crores. And currently, the offline margins are at 7.7%. Holistic margins for online and offline are at 3.8%. So they're also showing a margin improvement. If you look at the different lines of business, 4 lines of business, unit economics are good. All of them are profitable. So if you add to this the addition of the back end, I think, it is not only a growth at scale, but it's profitable growth.
We're also seeing competition rev up in the entire sector. Manipal acquired Sayadri Hotels for about 6,000 crores. They're adding 11 hospitals. I mean, give us the competitive landscape right now from organized players. There is PE backing large hospitals and large chains. Your own thoughts and what are you planning? Are you looking at any acquisitions?
We continue to look at acquisitions. Let me just put this one figure before you. Of the 16 lakh beds in the private sector, 1 lakh are totally private, held by trusts, etc. They are only less than 50,000 corporate beds. So there is a huge structural demand-supply gap. And I think that Corporate has done very well in lifting clinical quality. More importantly, if you look at our average revenue per patient, which is 1.72, it's 1.72 lakhs. It's now, we're accessible to insurance. So insurance has grown by 30%. Corporate hospitals, patients can access corporate hospitals. So therefore, we believe that the demand is strong. Patients have access to private health insurance, and this it will continue to grow. So consolidation is one way of growth. In Apollo, we believe both in acquisitions, brownfield growth as well as green.
All right, we'll leave it there, ma'am. Thank you very much for joining us. Good speaking with you, and I really appreciate your time here. Stock surging 6% the last I checked, and these are on the back of a very strong EBITDA beat which has come through. 7,700. The share of international patients is going to rise. It's at about 5% now. It used to be 7%. They're hopeful it'll go back to 7% by the end of this year. That's the guidance coming in from Apollo. We'll take a break. We are back. We stick with broadly the pharma healthcare space. Granules India will be with us to talk about their first quarter performance. Stay tuned.
Welcome back. Let's talk about Granules India. Subdued quarterly performance, top line growth only at 2.6%. Profits are down 16%. We have with us Krishna Prasad, Chairman and Managing Director at Granules India. Thank you very much for joining in. Can you tell us the 2 to 3 reasons for the weakness in Q1? It's just a modest 2.5% revenue growth. I mean, what were the pressure points in the current quarter? And 2, are you seeing a recovery Q2, Q3, looking ahead? And can you maintain margins at 20% plus?
Yeah, good morning. The main reasons for subdued performance or flattish performance for Q1 was, compared to Q4, was a capacity constraint. We are having a remediation going on in our Gagillapur facility. And actually, the production has come down by 10 to 15%. And the main problem is only supply. We have now our GLS plant, a new plant with 10 billion dosage capacity, inspected by the FDA, and we expect approval in a month or 2. And once we get that, we expect that we will be overcoming the supply issues. And also, Gagillapur facility, which is under remediation, we are planning to go back to the FDA shortly, and then we expect that that also should be cleared by December, Q3. And Q4 onwards, we are very confident we'll see an increased performance.
Okay. So at least half of Q2 is going to be impacted by capacity constraints because Gagillapur still stays as is with production down 10%. And even the new facility you said comes up only in the second half of Q2. And can it ramp up immediately? How much of the shortfall in capacity can it make up?
We do have a good order book position, and I think we can definitely do good with another 20%, 25% capacity. We should be able to easily sell. And all that is holding us back on the new facility is the FDA approval. We have filed, they did a pre-approval inspection, and we are just waiting to hear from them. There's no issue. The inspection went very well.
Okay, so as soon as you hear from them, I mean, it comes back up and the supply problems go away. That's the hope. Okay, now margins at 20% have been maintained despite these remediation costs, integration of Sen chemicals. Can you guide us on margins as well? Where do they head from here?
Margins will definitely, if you see our gross margin, it's been actually increasing, and only the increase in revenue is going to contribute to a very healthy margin. I cannot tell you numbers, but definitely there'll be a very good uptake in margins once the revenue increases.
Okay, all right. Hi, sir. Good morning. Good to see you, Ben. What can you guide us, though, in terms of a revenue growth for the year? The start has been in low single digits. What should we work with?
I think quarter on quarter we'll definitely see an improvement. And the whole year, I'm sure that we will see at least 15% improvement over the last year.
13% improvement. Got it. What about, what is it?
13 to 15% for this year.
Okay.
And
All
next year, when with full capacity, I think we will see a very good takeoff.
So 13 to 15% this year, and next year, given that you'll have full, capacity on stream and available, what should we work with? What is the aspiration?
Let's get to that. Definitely, the aspiration is high. And yes, maybe we can talk about it in the last quarter of this year.
You led me to it, so I thought maybe you want to give me a number. But that said, you are facing some headwinds in the paracetamol API segment. Have things normalized there? Demand is okay. Are you seeing an uptick now?
The demand has improved a little bit. There's a small uptick, but definitely not to the old levels. I think it's not going to greatly improve. There's a lot of capacity in the world today. People have increased capacities in India and China. And we actually have concentrated on more of PFIs and finished dosage of paracetamol. That's what keeps us going. But otherwise, APIs are not in great shape.
What is the revenue contribution purely of paracetamol API?
Oh, that'll hardly be about 10%. It's more from PFIs and FDs.
Got that. But this 10% is headwinded on account of excess capacity in the world. US was up about 7%, and that, I believe, is the company's largest market?
That's right.
Okay. So, I mean, what are you projecting from in terms of growth or numbers from the US? And considering this, the expectation on tariffs on pharma under the Trump administration, your own view?
It's going to be, US, we do expect a good growth. But the tariff situation is a little unpredictable as of today. We don't know what's going to happen. However, the confidence we have is we are in generic market. The margins are at the lowest. And the competition, it's a level playing field for all companies. If today, if we have a market share, good market share, with the extra duty, which is equal for everybody, we don't see a dip in the market share. And also the customers have been very understanding, and definitely we are having talks with them, and we definitely are sure that we should be able to pass on the increases to the customers.
This is not so much a question with regards to granules, but if there are, farmers right now exempt, but there are these investigations under Section 232, which apparently are going on. At some point, we'll hear. What is the, what's the increase in cost that you will have to take? And, even with those increase in costs, what are the difference? Is it a factor of 10 as compared to what you make when you make in the US as compared to what you make from here, then export out? Could you give us a sense?
If you make in the US, it's not a factor of 10%. I would say.
Not 10%. A factor of 10. Not 10%. So, is it? Would a 10-15% kind of tariff derail, businesses like you who sell into the US at all, or no? It'll be a minor speed bump.
For normal generic products, even at 25% rate of duty, will not justify manufacturing in the US as of now. But for certain type of products, we have a manufacturing plant there. About 20% of our revenue comes from US manufactured products. And there we have a healthy margin because the type of products are different. It's mostly in the CNS and ADHD space. But normal generics still doesn't make sense to produce in the US.
And that's unlikely that is the attempt as well, right? Because, generally the conversation there has been to lower cost of drugs for Americans. So would you imagine that that's something which comes under, were they trying to do something there on generics?
Whatever the attempt is or whatever comes out, duties are only going to impact the American public, and the cost of healthcare in the US is going to go up.
Yeah, eventually the consumer is to pay. Thank you very much for joining us. Good speaking with you. Good luck with the business as you look ahead. So that is the overall picture as far as granules is concerned. A bit about the overall environment as well. Mitesh is back with us with what she'd want you to do in terms of specific trades. We're up 114 odd %, 24,600 holding. Mitesh, what would one do?
As of now, today looks like a day on the positive side. On the index, as I said, I think we might head towards 24,750. Right now, I have one buy and one sell recommendation. On the selling side is Oil India with a stop at about 420. Look for targets of roughly around 400 on the downside over here. And metals are doing very well. So I have JSL as a buy call. Keep a stop at 712. Look for targets of 760.
Okay, all right. Thanks a lot for that, Mitesh. Well, in fact, yesterday we had mentioned as well in our morning chat that metals could be the space to look out for because there's some recovery in China, as well as we're seeing some weakness on the dollar index. And now the street is waiting by for some rate cuts as well. But talking about metals, we'll slip into a short break. Manisha is waiting for us on the other side. She'll tell us what's going on in the commodity space.
Okay, welcome back. 100 points on the Nifty, 24,600 still holding. Let's focus on some stocks which are moving. Honasa is up 10% in trade. Mangalam is here to revisit. He told you about the name right before we open, sticking on to gains. Mangalam.
It is sticking on to gains, and the street expects it to continue to stick on to gains because, despite, there being a weakness in terms of their summer portfolio, the revenues of the company grew 7.5%, which is higher than the industry on a low base, obviously. The EBITDA did not decline as much as the street was fearing. Brokerages were expecting around a 20-25% decline in the overall EBITDA, but here the EBITDA decline was contained to just about a 1% mark. Ad spends as a percentage of sales continued to hold that 34 to 35% sort of mark, and we had a net profit which saw a marginal growth year on year. What's good is that the underlying volume growth has come in at 10.5%. There has been a 200 basis points impact on sunscreen due to unseasonal rain. So if you add that back, the revenue growth would also be near double digits. The margins, while declined year on year, there has been a sequential improvement telling you that that trend may continue as well. There's a near 264 basis points improvement quarter on quarter. And focus categories, there are 7 categories in which the company is focusing on, which accounts for 80% of their sales. They've shown a double-digit growth already. And in the conference call, the management said that they aspire high teens growth in focus categories. And for FY26, they will expect margins, at 7% with 100 to 150 basis points improvement every year thereafter. Brokerages, they're positive as well. CLSA has written, on the stock, they've upgraded the stock to outperform a target price of 333. Jefferies too has upped their EBITDA estimates basis this beat by about 3 to 11%, and they have a target of 400. They say it's a high-risk, high-reward play, and currently it's high reward.
Thank you very much for that. The other big mover is Premier Explosive. Exploding in trade, 14% up. Ria joins in.
Well, yes, Premier Explosives has been trading higher in today's session after reporting a very strong set of numbers in quarter one of FY26. Revenue up nearly 72% compared to the previous year. EBITDA has also gained around 35%, but remember the margins have contracted by around 400 basis points in this quarter. Net profit has more than doubled to rupees 15 crores this time around. The material cost to sales has also jumped significantly to about 66% versus about 41%. However, other expenses have dropped to around 9 crores versus about 18 crores in Q1 of FY25. Coming to the order book performance has also been very strong, up over 32% compared to rupees 750 crores at the end of FY25. Right now it's at about rupees 988 odd crores, with defense contributing the most to the order book at around 87% of contribution. And apart from this, the company has also approved a fundraise of rupees 300 crores. So all of these factors are leading to the gain in today's stock of over 14%.
Okay, that's a big move, right? Ria, thank you very much for that. I just want to quickly make a mention of Shakti Pumps. I mean, it was a big start. The high today was about 899. It's cooled off. I mean, just 3% left now. 862 or so after the big gap up that we had in that one. Commodities in focus now. Manisha is here with what's top of mind for her. Manisha, good morning.
Morning, and thank you for that, Prashant. I'm looking at the crude oil prices because we've seen constant declines into this one. Previous week was 4.5% of a decline, and we are trading in the negative in the Asian markets right now as well. So with that, it's trading at a 2-month lows. Various factors really which are weighing onto the markets. To begin with, it is about the US crude inventories, which have risen by 1.52 million barrels. This is as per the API data, which is weighing onto the markets. The second point really is the EIA numbers, which say that the US crude oil output will peak at record 13.4 million barrels per day in 2025, and 2026 the output is going to be lower than these numbers. The other point is from the OPEC report, which says that they are leaving the demand unchanged, but 2026 they expect the demand to gain up anywhere between 1 to 1.4 million barrels per day. The markets also are looking at the US Department of Energy, which also says that in 2025 the global surplus is estimated at around 1.7 million barrels per day. So clearly we are looking at higher production, higher inventories and a surplus as well. And then you also have optimism around the US and Russia meeting, which is on 15th of August. In the meanwhile, while there are not going to be any sanctions on Russia, we already have seen US imposing higher tariffs on buyers of Russian oil. That is something that the markets hopes will perhaps be corrected going forward. But quickly, I also want to share the outlook for crude oil prices now for the rest of 2025. A lot of reiteration and some revisions as well have happened here. UBS talks about 62. Remember, we're trading at around $66 to $67 a barrel right now. Not too many banks and brokerages believe that the crude oil prices will gain on from here on. Most of them expect this year to end on a lower note. So $62 a barrel coming in from UBS. Goldman Sachs has talked about 66 on an average. JP Morgan talks about 60 by the time it's ending this year. Morgan Stanley is talking about 62.5. ETO market says that 55 to 75, a $20 of a range, is something that's becoming a norm now in sense of crude oil prices in a matter of 6 months. And you could be looking at prices moving within that range.
All right, Manisha, thank you very much for that. Commodities in focus there. We're going to take a quick commercial break here on the other side, our special segment, Market Masters. Latha in conversation with Ashish Gupta of Axis AMC and stocks, banks, bonds, and more. Stay tuned.